You can't be an investor without understanding and having a macroeconomic outlook and a microeconomic outlook. I'm not a trader, and so my short time horizon is 4 years, during which 5 years will I'll take that kind of risk, and my normal time horizon is a decade for a forecast, and the ideal time horizon is forever. It's property. Do I want to own Manhattan? Do I want to own London? Do I want to own gold, or do I want to own Bitcoin for the next 30 years, right? Having said all that, right, the way Bitcoin trades oftentimes is it trades like with the derivative, the acceleration or the jerk or something of the money supply. So the fast money traders control it in the near term, and they will tend to kind of do the opposite of the long term, which I find interesting. When the Fed said there was no inflation, right, people come on television and say, there's no inflation, maybe you don't need Bitcoin because Bitcoin's an inflation hedge. And then the fast money trades against it for a bit. And then another week or 2 weeks go by. And then once you get outside the fast money, the momentum, the more fundamental players come in and they start buying it up, and it accelerates. And I think when the Fed says, well, I guess there is inflation, we've got big inflation, but we recognize it's a problem, the fast money says, oh, well, they recognize it's a problem, so it trades against Bitcoin. Like, well, the Fed's going to treat the problem. And you're in that dynamic. And then I think eventually over time, the longer term investors come in and they start to drive it the other direction. So you got to decide whether you're fast money. If you're fast money, you're trading on the volatility, and those guys, I guess they know what they're doing. They can figure it out, but I can't figure it out from hour to hour, day to day. My view is, if everybody in the world today universally agrees we have an inflation problem, the question you got to ask yourself is, if the Fed raises short-term rates to 1% or 2%, and they've agreed there's a 7% CPI, and if you can establish a 15 to 20% monetary inflation rate, what's the likelihood that inflation's going away? So my macroeconomic view is there's 130 currencies that are floating right now in one shape or form. The strongest currency is the dollar. It's losing purchasing power at maybe double the rate it was losing purchasing power before 2020. So if it was losing 7 to 10% of its purchasing power a year, it's now losing 15 to 20% of its purchasing power a year. We're going to stay in an environment for the next 4 to 8 years where we're going to run higher deficits. We're going to have a lower interest rates, looser monetary policy than we had before 2020. There's just a question of, are you a 15%er or a 20%er or a 12%er? But I don't think anybody reasonably can expect that we're going to go back to a tighter money policy than we had in 2019 or 2018. So my forecast there is all the strong currencies of the world, which are the dollar, the euro, and then all the currencies pegged to the dollar, the DRAM, etc. All of those currencies lose 15% of their purchasing power a year for quite a while. The second tier currencies are losing double that. They're losing 30% of their purchasing power a year, and they're just weakening against the dollar, and you can see it. And then the third tier currencies are losing anywhere 50% to 100%. Well, they're running 50 to 100% inflation. You can see that in Argentina right now. And the indicia of the weakest currencies is either nominal inflation is diverging from the black market inflation. Like the official exchange rate of the peso is like 100 peso to the dollar, but the blue market rate hit 210 pesos to the dollar the other day. And 36 months ago it was 15 pesos to the dollar. And 15 years ago it was 2 pesos to the dollar. And I remember when it was 1 peso to the dollar. So the weakest currencies are going to have capital controls. We see the Chinese currency, the CNY is pegged to the dollar, but the only way they peg it to the dollar is with capital controls. And Argentina has somewhat capital controls. That's why you got to pay 200 pesos to get $1, but officially the government only pays you 100 pesos.